Eric Muathe, Muathe.com. Happy New Year, January 2nd, 2016. This is going to be another abbreviated market summary combining US markets and the world markets. So let's take a look at the return for the S&P 500 to begin with. For the year, S&P 500 ended 2015 down about 0.73%. So after all the volatility, the market was pretty much unchanged for 2015. So interesting, given that all the drama that took place, as always, and still unchanged. How does that work out? Okay, let's take a look at the charts. We begin by taking a look at the Nasdaq. And what I see in many of the charts we're going to be looking at is a lot of indecision right now. Take a look, for example, at the Nasdaq weekly. You can see top side on the weekly RSI resistance. Also, we can see bottom side support. So we're pretty much stuck in this wedge. And at some point, we're going to get out of that wedge for the next swing trade. And so we kind of have to wait to see which way the market decides to go. Even though it is sideways, I still lean a little bit to the downside, because take a look at this break on the Nasdaq as an example. So this break in August on the RSI trend line, that slight break there, we can draw a line from there. And actually that break was a serious break, because once we broke through here, you see the market had this plunge. And so over the last week or two, we've come and hit that red line. So net, even though we are, yes, stuck in a range, so here's a range on a wedge, it looks like there's also a little bit of a sign that the market actually has hit resistance, and week to week could easily go down. Now keep in mind where the Nasdaq closed at the end of the week, which is slightly above 50. If it moves below 50 on a weekly RSI, we should expect to see a big down week. If we take a look at the Nasdaq daily, we can see a wedge forming. If you draw it like that, something like that. So we are stuck in this wedge over the last couple of weeks. And so at some point we're going to get out of that wedge, and so we have to wait to see what happens. We also see the same type of wedge formation on the daily RSI. If you take the lows and you take the highs. So we are stuck in this range. Now we ended Friday with a little bit, I guess Thursday, with a little bit of a sizable drop, about 1.1% on the Nasdaq, because the S&P 500 and the market itself moved below 50 on the daily RSI. So that drop on Friday was not too much of a surprise based on how we had ended coming into the last trading day of the session. The markets were trading above 50. As they moved below 50 on the daily RSI is when we got that big move lower for the day, last trading day of 2015. Let's take a look at the Dow. And one thing we can do here is take a look at the MACDs for the Dow. And clearly what we need to be watching for here is if the MACDs can stay above zero, or at least if the main MACD can stay above zero. I'm using two MACDs here. If they stay above zero, then we can expect markets to be generally positive as we begin the year. But if we crack below and trade below zero, any movement below zero on the MACDs would suggest that the market is going to have to begin the year 2016 with a little bit of a pullback on a week-to-week basis. So above zero on the MACDs, and the market should be okay. Below zero, we might see downside momentum. Keep in mind where the Dow ended with its weekly RSI. And the reason why I'm pointing that out is any move below 50 this coming week might suggest that the market is going to have a sizable down week. Also, we can see that the Dow is showing the same price wedge. So there's a wedge of some sort on the top side. We draw it like that. And if you take the lows and connect them, you see again here that we are still stuck in this wedge. So at some point we're going to get out of that wedge. If it's above the wedge, one can argue for a movement higher. If we break below the wedge, then that could also be an argument for markets going down. We see the same type of RSI wedge formation on the top side there on the daily RSI, and on the bottom side this way. So we are definitely stuck in a range. No need to be aggressive, in my opinion, either way, until this wedge situation can resolve itself. On the Dow daily, and this is why I'm saying that even though the markets are generally in a wedge, it seems to be more and more that the chances are for a little bit of a pullback, because take a look at the Dow on its main MACD. Seemingly here we are showing resistance, and we've been unable to move above zero. So if the main MACD and the default MACD on many charts continues to show resistance, then that suggests that even on a day-to-day basis, markets are more than likely pointing down. So if the MACDs stay below zero on the daily time frame, markets should still continue to be trading to the downside as we begin the new year. Take a look at the Dow Hourly, and on this hourly chart I'm using RSI period of 26, and we can see that we closed the year with coming back to this support line. So this line connecting the lows on the hourly does give a reason as to why the market might choose to begin the year with a move higher. If it bounces on this line, that might suggest the beginning of the week might be a nice gain for the market just because it's back to that support line. We can also see that type of action if we take a look at the 30-minute chart for the Dow. It gives us also a line of support as to where the market closed the year, coming back to show support on this lows line. So there is evidence that if the market can hold that, the first part and the early part of the week might be that the market bounces. Otherwise, if something were to make it such that the market breaks below that support line, then maybe we start the week with a little bit of a pullback. But since we ended exactly on support line, we just have to assume that that means the market held support and might start the week with a little bit of a positive movement. Take a look at the S&P 500, which closed a tad bit below 50 as we ended the year. So this here, if it can recapture the level above 50 on its weekly RSI time frame, anything above 50, and the market should have a nice gain for the week. And keep in mind, we are still stuck in this wedge formation. If you connect the lows on a weekly time frame, and also if you go back to the highs going back to 2014, so we are stuck in a wedge type formation. At some point we're going to get out of this wedge and we're going to have the next swing trade, and we don't know that it's going to be a breakout or a breakdown. Take a look at the MACDs on the weekly for the S&P 500. If they can maintain above zero, then that's suggestive that the market wants to move higher. If they can't hold above the zero level on the MACDs, then we have to assume that markets are generally going to be looking to go lower. S&P 500 daily also has this wedge. Guess we can draw it something like that. There's a wedge on the top side, and also you can draw a wedge line here. So we are stuck in that range. RSI on the daily also confirming top side wedge formation, or a line on the top side and also on the bottom side showing connecting the lows. So we are stuck in that range, and so at some point we either break out for a swing trade higher or we break down for the next swing trade lower, and so we have to wait for the market to decide which way it wants to go. Take a look at the S&P 500 on a 30-minute chart, so 30 minutes of data, and draw a line connecting the lows. Pretty much that's where it closed at the end of 2015, suggesting that if it holds, we start the new year with a little bit of a bounce, unless we break through that line. So we ended exactly on support line. We have to assume that line is going to hold. Otherwise, if we break through that, then we start the year with a little bit of a move lower, and so we have to wait. It seems like we close on support. The thinking there is that we start the week with a little bit of a move to the upside. Let's take a look at some world markets. We begin by taking a look at Australian market. Coming off the highs here in early part of 2015, we see that did correspond with this movement on the RSI. RSI broke this trend line, and since then, if we draw a line from there, something like that, here the line just so happens to be slightly above 61.8. We can see since then this is where resistance has been seen. Resistance on the red line for the highs there. We came close, not quite, which is consistent with this high here. Actually, this high there, we hit that resistance line for the highs there, and coming into the last 2 or 3 days of the year, we hit that level, suggesting that day to day we can see that even the Australian market looks to show some resistance. Take a look at the weekly for the Australian market, and what we see here is where it has been stalling. Come back to this break point on the weekly RSI, just a little bit above 50. So we broke through here in May, and we've been down since. If we draw a line just slightly above 50, something like that, you can see that ever since this was resistance, double top resistance around the 50 level for those highs. and since then resistance here for the highs there, and now we are touching that line, suggesting that as we begin the new year, this might also be an area where we can expect a pullback week to week, and that pullback should be for a good gain to the downside. Why? Because the RSI on the weekly would be moving below 50. So if you combine the daily analysis and the weekly analysis, it seems to me that this is indicating resistance as we begin the new week, and also a pullback in the coming week would be what my guess would be. Take a look at the Chinese market, and we can see lots of sideways action here. Let me draw that different way. You can see that we are hugging, for example, the 50-day moving average, and also we are trading below the 200-day moving average. So it seems like we are still stuck in this range between the 50 and the 200-day moving average. So there is an argument for a sideways market. Also, we can see that on the top side there's some type of resistance here. Recently it hit that level and pulled back, and also there's a line here connecting the lows. So there's another wedge. At some point, if the market can blast above this range, that would press the prices to the upside. Otherwise here, if we crack below that line, that might pin prices and move them lower. Take a look also at the daily RSI, suggesting that once we broke through here, so this break in June brought the market off the highs. We haven't been back to that level since then. We can draw a line from there, which is somewhere around there. This line so happens to be at about 61.8 on the daily RSI, and you can see we broke through this line here. It also corresponded with the RSI trend break there for the highs there short term, and again over the last 2 weeks or so we hit that level. So there's resistance on the top side, we can see that, and yet there's support on the downside on the daily. So lots of reasons why the world markets are still pretty much stuck in a range, depending on how you look at it. Price wedge and RSI wedge, you see this all over the place. Take a look at the weekly, and the weekly we've been struggling, and I've been talking about this over the last couple of weeks, that the Chinese market has been struggling to hold above the 50 RSI level ever since it broke down somewhere here in July. So this break in July for this movement somewhere around here off these highs, and since then this has been resistance to resistance here in August, and over the last couple of months this has been where it has been struggling. So as long as it's showing resistance on the weekly RSI, that suggests that week to week this market should go down, or at least be sideways, unless it can clear recent highs and also clear RSI resistance there. So if it clears the price highs, RSI resistance, we can expect the market to go high, but I'm leaning towards resistance just because of the RSI. It's been coming here and failing. So net if you had to ask me to pick one direction, I think a pullback would make more sense until we can clear recent topside RSI and price resistance levels. Take a look at Japanese market. So the Nikkei, you can see also a wedge. We take the lows and you connect the daily closing, you can see that we are stuck in a wedge, and so at some point we're going to resolve out of that. Keep in mind we're also trading around the 200-day moving average and also just slightly below the 50. So a lot of sideways action here. I don't see any reason to be bullish or bearish. It's just a sideways market. Until we can get out of this range, maybe we can get some idea where the market wants to go for a swing trade. Otherwise, it seems to be stuck in that wedge. In my opinion, we have to wait for some type of resolution. Let's take a look at the Nifty, and what we see here was a nice gain to conclude the year, but now we are coming into, and I think, what could be resistance levels. If we take the highs on the weekly RSI, just simple line connecting the weekly RSI highs over the last year plus, you can see we close exactly on that level, suggesting to me that more than likely as we begin the week this is going to be a resistance level, and one should not be too surprised if the market pulls back. So that's what the weekly RSI is saying. Otherwise, a breakout above this resistance line is what the bulls want to see. So the bulls would like to see the market come and clear that very easily identifiable resistance line. Anything above that, so a breakout above that line, is what the bulls want to see. Otherwise, we are back to resistance, suggesting a pullback might make more sense. We take a look at the daily for the Nifty, and one can see where it might stall. Take the highs going back to early 2015 and just draw a line connecting the highs like that. You see it connects nicely throughout all these highs here. And so we did close exactly on that level, suggesting that if you see a pullback, it makes sense because of the resistance line that is where it closed as we ended the year. Also, that's one view. The other view is clearly where it broke down. So if we draw a line around 61.8, it should be somewhere around there. So a line where it has been stalling at about 61.8 on the daily. You can see double top resistance here for the highs, resistance here for the high there. There was some type of attempt to move, but resistance eventually for the highs there, resistance here for the highs here, and so we are back at this level. And so if we show resistance there, clearly we are going to have to expect the market to pull back day to day. We take a look at let's take a look at a monthly chart, and just want to show you. We take a look at, let's just go take a look at 13 years of monthly data. And what we see here is, if you connect the lows of 2008, early 2009 on the RSI on the monthly, we can see that this is where the market is doing its best to hold. So if it can hold this line on a long-term basis, holding here would suggest that net we should not be too surprised if the market moves higher. So that line is holding. Otherwise, what the bulls don't want to see is the market breaking through that support line, and that would lead to a major bear market. Support is good. Break of that trend line on the long-term monthly chart would suggest a serious bear market. So we did close exactly on that line. Let's give the benefit of the doubt to the bulls because the line is holding for now. Because of the resistance on the daily and weekly RSI, take a look at the hourly. And the hourly is back to resistance level. This band has been resistance. It was resistance during the highs here, and it's pretty much been resistance. This has been resistance on the RSI going back to middle of December. So unless it can clear that line, I think here's another indication that markets more than likely begin the week with some type of a pullback because of the resistance on the RSI on the weekly chart and resistance also on the daily chart. So the weekly, daily, and hourly do suggest that net starting the week with a negative reaction makes more sense. Otherwise, if we can clear these resistances on the daily, weekly, and hourly, the market might have a chance of moving higher. So I think more than likely pullback based on those weekly, daily, and hourly time frame chart analysis. Let's take a look at some European markets. Take a look at the French CAC 40, and we had come into the last part of the trading week, coming here, testing this recent break. So this break in the RSI led to this movement lower, and so we draw a line from here, and you can see that coming into the last two trading days of 2015, we hit that level and we are pulling back. We are also trading underneath the 50-day and the 200-day moving average. So net this market also is sideways, but more than likely pointing down would be my best analysis. So resistance on the RSI, trading below the 50 and the 200-day moving averages. Net we have to assume, yes, it is sideways for now, but with a slight suggestion of lower prices also. Take a look at the daily chart for the FTSE, so the London Financial Times Index, and there's a line where we've been discussing that it has been stalling. And this line goes back to the break of the highs, so this trend line break. And since then, all the highs have come on this level. The resistance there, for example, highs there, resistance here, highs here, even the recent highs have all come. Resistance on this band for the highs there, and now over the last 2 or 3 days we hit that level, and this suggests to me net we are still, even though we are trading around the 50-day moving average, net looks like resistance, and one can expect markets to pull back after that daily RSI resistance. Let's take a look at the TSX, and we can see here on the Canadian market, if we take the line that we drew on the last weekend analysis and connect the highs on the weekly RSI, we talked about the possibility of resistance coming into the last trading week, and that was confirmed by resistance on this line, hence the pullback. So as long as the Canadian market is still showing resistance on this RSI line, one should still expect markets to be pulling back based on that weekly RSI resistance. And also you can see trend line resistance on the price. If you draw it something like that, very clear line of resistance until such a point that the market can figure out a way of moving above the resistance lines. So we got two, one on the RSI, until the market can figure out a way of moving above those two lines on the price and on the RSI. So movement above the price and movement above the RSI. One can assume that net this market, in my opinion, seems to be poised over time, still with a high probability of probing lower prices. Having said that, let's take a look at one more, which is the hourly chart. Just like the Nasdaq, S&P 500 and the Dow, you can see that it ended the year coming back to a support line on the hourly. So maybe we begin the week with a move higher, otherwise we will break through here and begin the week with a little bit of a plunge. So yes, net markets are sideways. If pressed to pick one direction, looks like it is down short term, and that's my view. And also, to confuse you even further, it looks like hour to hour there's some slight evidence that we might start the week with a little bit of a move higher. Anyway, so wish you all the best, and do wish you a prosperous 2016. Peace and blessings. Eric Muadid, muadid.com. Good luck. See you guys, and let's see how 2016 plays out. Mwah.